Hello, guys. Finally. Hello, good morning, everyone. Thank you for joining us again today. Sorry for starting a bit late. Some technical issues, actually network issues. So I think we are here now. Let's start. This is our morning market review. My name is Emmanuel. So without wasting much time, what we'll do this morning or what we'll do this MMR morning market review, we try to analyze the market, look at reports across currency pair, commodities, indices. What we do is we try to give you tips and tricks how you can navigate the market profitably. I want to believe you have been driving and navigating the market from January to February, and now we are in December. Try as much as possible to keep uh, to trade with risk management in mind, also because this is the end of the year, it's also the year on the high. Okay. So what we have is we have fundamental analysis, we have technical analysis. Fundamentals, just get to the website, you look at the news activity that can affect the market, right? So once you look at those news activities to tell you whether a particular currency pair will experience some volatility. Then when you see those volatility, then you want to wine and dine with it. You know, we traders wine and dine with volatility. That means the movement, just like what happened to GBP yesterday. There was a rate decision. Sorry, to USD yesterday. There was an interest rate decision yesterday. And because of that, we saw the dollar gaining massive strength, right, across major instruments and asset classes. So, for example, we saw GBP nose diving, we saw Euro USD nose diving. In fact, GBP did over 150 pips. So, this is what I'm talking about. So, let me just share my screen with you and show you where you can be able to see those news. And of course, when you see the movement in any direction, you can enter and of course trade, okay? So guys, I've been able to share my screen. This is my screen. You can see my screen. So this is Forex Factory, one of the website, not the only website, one of the website we can use for our fundamental events. So you just come here and check for news activity. For example, today is Thursday, guys. And of course, all of these red ones are the high impact news. High impact, another word for it is high volatility. So these are the high volatility news, right? We're expecting to rock the market, rock the day. Then for today, we have, okay, this is a JPY, right? So I was talking about the one for yesterday that has just passed. That was 8 p.m. We saw a rate decision there. So, and we saw a rate decision there, and they were able to cut their rate, as you can see, right? And in the US, their interest rate was 4.75. They were able to cut it, right? This is about 25 basis points. So because of that alone, we saw the dollar gaining massive strength. So that's just what we do on fundamentals. You just check for the news, whether the news will be good or bad. In this case, it was good for the dollar. Sentiment around the dollar drive it to be good, okay? So you just check for the news, and of course, if it is good, of course, you know, or bad, either good or bad, it will affect the currency pair or the assets you are trading, right? So I also look at the timing of it. So for today now, this is Thursday. JPY had theirs around 3:52 a.m., right? That's the one for JPY that's passed. Then, of course, 1 p.m. today, Nigerian time, we have the news on the just like we had that of the US, right? The Federal Reserve, the Fed, where they cut their rates, right? So today is for the pound, right? So what are they going to do? Will they be cutting their rate? Will they be holding their rate? So you can see it here, right? So the forecast is for them to hold their rate, right? Depending on the inflation values, the sentiment around the market, the labor market and all of that. So but then that will be by 1 p.m. guys. To be by 1 p.m. So by 1 p.m. you'll be expecting the pound to rock, right? either to the upside or to the downside. You just want to have stop loss and take profit on your trade. It doesn't stop you from trading this money. No, you can go ahead and take your setups, right? I want to believe you have setups. Setups means you're trading with a particular strategy, right? For example, our fresh pip, our guard cross, that means golden and death cross, several strategies. If you have them on your chart, don't allow the news to stop you from taking advantage of them, right? Go ahead and take advantage of it. They have a stop loss and take profit on your trade. So the same today, after 1 p.m. by 2:30, we'll be having the gross domestic product and of course unemployment claims for today. So that will be by, oh boy, that will be by 2:30, right? That will be by 2:30. So we're expecting the pound to rock by 1 p.m., right? So that means all of the pound currency pair, right, will be rocking the upside or even the downside, depending on whatever it is. I mean, the decision, I mean, the actual values, right? And of course, by 2 p.m. also, please, this is what winning traders, successful traders, they do, right? So they know when the market will be moving or rocking to the upside or downside. So they position themselves very well to take advantage of it, right? So this is what winning traders, they do. So please, if you have questions, get to the chat, drop your question there, right? I would prefer you drop questions. That's for you, Felix. If you have questions, drop question at the comment section, right? I'll take your question there. Thank you. Then, of course, the same 232, we have unemployment claims there, right? So that will be for the calendar event for today. So let's look at then for tomorrow too. We have also, right? We have PC, personal consumption expenditure, another powerful one. That's a broader related to CPI, right? So guys, what I'll do now, I'll just switch over to my chart so that we can do some technical analysis, right? So guys, let's do some technical analysis here. So follow me through. Let me share my screen so that we can do some technical analysis. So I've been able to share my screen, guys. Can you see my screen? So let's start from USD index, right? The dollar index. So just like I said earlier on, we said that rate decision to cut their rate favor the dollar from the sentiment around it, right? So we saw this thing pushing to the upside. So one of the ways you can get more value, right, around fundamentals, you have to be watching some of these news, right? When they are released, you can watch the news on Bloomberg. You can also watch on CNN, but I would prefer you watch on Bloomberg so you can see a lot of analysis around it. Now you can actually watch it online, right? So you can see why this particular instruments pump to the upside, right? So what has been happening here is that the instrument has been on a range before it broke out of that range. So it needed this force to break out of that range. So the first thing you do once you open your chart, you want to trade, the first thing you do is to draw all of these things. The way I'm calling all of these things, you understand what I mean. Do small drawing to make the chart easier for you. So that means the dollar index has been on a range. As you can see, by range, we mean it has been playing between two prices, right? This is the high price, this is the low price, right? For first day, second day, third day, fourth day, it broke out, right? It broke out. It broke out because of the news. So, but before that range, the market has been trending upward, right? So usually, if the market is on a range, if the market is ranging, if the market is ranging, it simply means usually up to 85% of the time, it will continue the previous trend before the range. So write it down. Write it down. Very important. If the market is ranging, if the market is ranging, right, So it will continue the previous trend 85% of the time before uh, the range. So that means the market was already trending, occasioned by a push to the upside, right? A push to the upside here. And of course, a retracement, a break of structures, right? To the upside, a retracement to the downside. So the market has been pushing upward, got into this range, right? So the market normally goes into a range because of perhaps momentum is now low, right? So the momentum that was pushing it from here is now getting low. Perhaps the market is trying to do what we call accumulation. That means trying to gather in more volatility, right? So more liquidity, right? The market is trying to gather, it's trying to gather. That means it's accumulating orders. That's what we mean by accumulation. So this is an accumulation phase, right? So the market went into accumulation phase. Then, of course, after it has accumulated a lot, it will break out. So just like in life too, we also accumulate, right? So we accumulate things. So from January till now, most of us we have been accumulating money, right? So it accumulated a lot of orders that it broke out, right? So the news, it was the news that caused it to break out, right? So then, but then after this breakout, of course, we are still on the upward trend because it has given us a new high. That's 107 there, 0.5850. That's a new high. So normally speaking, two things can happen for today on the dollar. So if the strength is still very strong, that of what happened yesterday. It's supposed to go into a mini range, right? A little range. Then of course I'll be expecting a retracement at least to the downside because it has left a lot of vacuum, right? A lot of vacuum that needs to be covered. So at least it should do up to 38.2%. It should retrace. So this is not a good time to now to continue buying. So let's start with Euro USD real quick. So that retracement, I think Euro US is already experiencing it, right? This is the retracement I'm talking about. So that's a retracement, not the direction, right? That's a retracement. So a retracement gives you an opportunity to close your trade. If you have a bad trade, it gives you an opportunity to close your trade at a better price, right? Or at a smaller negative amount. So that's if the trade is against you. If the trade is in your favor, a retracement gives you an opportunity to accumulate and to enter more trade, right? Because you have seen that the direction is downward. Obviously, this direction is downward. So since it's downward, this retracement is giving us an opportunity to enter more, right? To enter more trade. That's what I mean by to enter more. So if you look at my chart here, this is a 4 hours chart. This is 4 hour chart, right? So you can see that we got the break of structure somewhere around here. So this is where the market experienced the break of structure. By that I mean this is where it was able to trade below the most recent low, right? So that means if I should draw my fib, I'll be drawing from this high to this low, right? So the market has already done 38.2% retracement. Can you see that? It has already retraced upward to 38.2%. For an aggressive entry, this will be a good time to enter, right? Because it has already done around 38.2%. So you can use your discretion there. Then we have another level here to be okay. I think Ade, you're saying you cannot see my screen. Is it true? The rest of us, can you see my screen? Emmanuel Obaji. Please, can you see my screen? Someone is saying he cannot see my screen. Is it true? I've shared the screen. I'm analyzing the instrument. We've gone through USD index. We are on the precious Euro USD. Okay, you can see my screen. Fine. So Adedotum, please, you may want to check why you cannot see my screen. Maybe you want to maybe check your connection, right? Check your connection, please. The rest can see my screen. So a good retracement, thank you, I can see you there, Ekpemski. So a good retracement would be for the market. The market has already done retracement at 38, right? 38 too is a good retracement, but above 50% is usually the market giving you a premium. So premium price is that big players all over the market that are not chasing the market, that are hunting the market, normally wait for premium price. And premium prices are usually above from 50% and above. So therefore, you have two options, right? So it is either you go with 38.2% or you go with a premium price, right? So sometimes if the momentum is so strong at 38.2%, just retrace and of course start going down, right? But usually for those that understand equilibrium, that the market has to balance itself, it has to balance the buyers and the sellers. So most times they wait for the market to offer a premium price. That means to retrace very well. Offering premium price on the downward trends for the market to retrace very well. And that's meaning, okay? So therefore, what's my bias? My bias on Euro USD is still a sell. So remember, for you to take a trade, for you to have a setup, you start with a bias, right? So I mean, you choose one side. You don't stay on the fence. So as a trader, you don't say today I'll either buy or sell. No, you open the chart and create a bias, right? So what creates your bias for you is the break of structures, right? So the last break of structure is to the low side, right? So that automatically the momentum is shifting, is on the downside, right? So that alone is your bias. So therefore, you want to look for opportunity to sell. So my bias is to sell. The next thing is to wait for a good price, what we call area of interest, right? 38.2 is a good area of interest. Another area of interest is above 50%. So guys, let's look at GBP USD, my precious GPUSD guys. So GPUSD, after GPUSD, then I'll look at gold, and then after gold, we'll jump to US 100 guys. US 100. The most traders just expect the market if it's going down for it to just continue to be going down, going down, going down. It does not happen. It does not happen. It's only in the dream that it happens. In reality, when the market offers buy side liquidity. So, guys, I think the network is fair to us again. We are back. Let's continue, guys. So, let me share my screen again. So, we are about analyzing GBUSD. So, let's look at GBUSD quickly. After GBUSD, then we'll look at gold. So, I want to believe we have traders that trade GBUSD, right? You trade GBUSD. Let me see your hand up. So this GBUSD, the same thing happened to GBUSD. We got a very big push to the downside. Then, of course, the market is also retracing. So let's see how much it has retraced. So let's see how much it has retraced. So it has, how many percent has the market done there? The market has done 23%. It has not done up to, it has not done up to 38%, as you can see there. So that would be too quick, right? Too early. But some persons will be like, some traders all over the world, they're already jumping. They'll be saying, but Emmanuel, this thing have retraced to support turn resistance. They will say, it has retraced to support turn resistance. So let me enter now, since it has done support turn resistance. But you have to wait more to get to 38%, right? Wait for it get to 38%. Wait for good retracement. We know the momentum is down, right? The momentum is down. Just wait a little. But for those aggressive, those that want to enter aggressively, why not? Why not? Okay. So GBSC is down. There is no much, no long analysis on it, because for what we are seeing, it is down already. That means it did a break of structure. This is a break of structure, so it's a downward movement. But before that break of structure, we saw one other break of structure here. So it has always been going down, right? Mm. So what do? We just wait for a 50% retracement or even a 38.2% retracement around this area, right? So at least you should do 50% of the move. So sometimes you may want to wait. It don't even get there from here to turn and start going down. It's still okay. Eh? You are trading conservative entry, not an aggressive entry. So it's still fine. Okay. So now let's look at gold, right? So let's do gold real quick. Gold, yeah, this is gold. Hmm. So this is the analysis we did the last time I was here, right? So yesterday we saw gold jumping, moving to the downside. It could not even move. It started jumping or gap to the downside, heavy gap. Right. So gold is one instrument that has offered a lot of discounted prices, right? Discounted prices. We all know that in an economic chaos, whenever there is times of, whenever we are in times of uncertainty, crisis, right? Gold normally gets a lot of value, right? Gold normally appreciates. So anytime it gives you a low price, an opportunity to jump in. For example, let's say Tesla started having some crisis. Then from that crisis, Tesla is number one EV, right? Electric vehicle in the world. So let's assume they started having some crisis, and that crisis started making their shares to plummet, right? I mean, to start diving low. Let's say their share is selling for $500 per share. Let's say it's started diving low as 150. The more it's diving low, the more it is offering lower prices. That's an opportunity. For crisis entrepreneurs, I mean, those that want to make money from crisis, uh, that's an opportunity to accumulate and buy more. Okay. So when you see, for example, US 100. So for I think someone is asking question. He say Bemski say for Euro US and JPUSD, is it not better to see a bearish pattern before entering? Of course, before you place a trade, you must see a lead. You must get a lead. By lead, I mean, if you want to buy, you must get a bullish pattern or a bullish signal. An example of a bullish signal is a bullish candlestick is a bullish signal, as simple as that. Then another one is a bullish engulfing. Another one is the pin bars, right? That is showing pressure to the upside. Hmm? So there are several of them. Another one is break of structure. So I think you're correct there. You must get a lead. You must get a lead. So gold gap to the downside. So let's do small analysis here. So gold has already done more than 50% replacement to the upside. So if we are to draw from this high, so gold is somewhere around our the premium price, right? Gold is somewhere around the premium price. So technically speaking, gold is in a good position for a sell, right? But before you enter a sell, you must see the market clearly turning to the downside. So you can do that on a lower time frame. So you can do that on a lower time frame. For example, look carefully. I've moved to 15 minutes time frame. This is a high, this is a higher high, right? So that's an upward trend in the making. This is a high, this is a higher high, right? So before you sell, you must have a break of structure, or you must see the market should print its first, the market should print its first lower low, right? So that means the market should trade below this low, right? So before you can sell here, the market should trade below this low. So trading below this low simply means that the market have shifted from the upward trend again to the downward trend. And of course, the parent trend is still an upward trend. Guys, are you guys getting value? I hope you're getting value. So it should shift, right? It should trade below this low. So once you trade below this low, then that is a good place to start your sell, right? Why? Now, even though it has entered my area of interest, right? Entering a sell here, right, is a high risk trade. Why? You are selling when the market has just done a break of structure to the upside, right? So from there, it will retrace, of course, we know. But then you're selling on an upward trend, right? On this upward trend, this localized upward trend, if you understand what I mean. So you want to wait as a conservative trader for the market to show you its leg by trading below this low before you can do your sales. Guys, do you understand that? All right. So, but then we are doing that because the parent trend is still an upward trend, right? Except you want to obviously trade against the trend. You want to believe your instinct and go ahead by trading against the trend. You can do that too and make money. But then that was so your question is how is good on upward trend? Adewale, are you sure you're following this analysis? Mhm. Are you sure you're following this analysis, Adewale? Gold is on a downward trend from what we are seeing here, but I had to change to a lower time frame. So on this lower time frame, what are we seeing here? This is a high, this is a higher high. So on this lower time frame, gold is shifting to the upside, right? On this 15 minutes time frame, because we have seen a high. So perhaps you are just listening to the audio, you're not watching what I'm explaining, Adewale. So we are seeing a high on the lower time frame because this leg is a retracement leg, right? But the retracement leg on the lower time frame forms a mini trend, right? So we have seen a high and of course a high and a higher high, right? A high low and a low and a higher low. So that shows you a retracement, right? But on the lower time frame, that is defined to be a trend on the lower time frame, right? So, but you follow the bigger trend, which is the downward trend. I call it the parent trend. The parent trend is a downward trend. So what do you do with that? You wait until this lower one have shifted and of course following the parent trend. So that's why I draw this thing. Okay. So by the time the market have traded below this low, both the baby trend and the parent trend are both now pointing downward. That's the best time to enter a sell, right? So we wait for the market to take out this low. Otherwise, this baby trend can mature, come guys. It can actually mature, it can grow, guys. So I hope you got value from that. This is raw market analysis. Now, of course, this is market structure analysis. And I'm sure you guys are getting value. So we have done Euro USD, the guy that asked for gold. Your gold has been honored, right? He said, gold, oh, where is you? And that's Emmanuel, my namesake. He said gold. So we have done gold. So if you have some questions on this gold, you can ask. Then we'll move forward to indices. So let me just give you like 30 seconds and 10 questions on this gold. So if you have trade already on gold, let's have it. Let's have it. If you're not seeing a trade on this gold, okay, let's also have it. Then also, if you don't have a nursing trade, if you want to take a trade, because analysis is for you to be a successful trader, you should know, you should have your entry. Your entry should be top notch. Entry, trade management, and exit, right? Entry, trade management, and exit. So these three things is what you look at for. Entry is what you do before you place the trade. Then, of course, trade management is what you do when the trade is running. Exit is what you do before you exit your trade, right? So these three should be in place, right? Entry, trade management, and exit, right? But before that, the analysis doesn't just cover, the analysis is not only for those that want to pick a trade, it's for those that are actually managing a trade. So you can do analysis to manage your trade, also do analysis to exit your trade, guys. Somebody have come up now. I think that's from AY. You say you are on a buy. Can you hold? So it depends on where you're buying from, right? Mm. You say you're on a buy. Can you hold? Now it depends on how much you have, what your risk tolerance is. The parent trend is on the downward trend, guys. Okay, but you can hold, or if you can pump in more money to your account, right? If you can pump in more money to your account. So one of the things you do whenever you want to hold your trade is to go to the higher time frame to go and grab some hope. They say hope maketh not ashamed, right? So you can go to the higher time frame, go and look for some hope. I mean, by higher time frame, I mean you can go to T1, you can go to H4 to go and see whether that bigger trend is in your favor. Then look out for support areas and tell yourself this market should not break this support. If not, I have to close it. Then pump more money into your account to hold it until it gets to that place. That's just how you can nurse a trade. So my answer for you is if you have the budget to pump in more money, go ahead and do it. This is not a season to lose money. Pump in more money to hold the trade, nurture the trade, because on the higher time frame, as you can see, from beginning of this year till now, gold has been going upwards, right? As you can see. So it simply means you may stay longer on the trade, but then it may still turn in your favor, okay? So I think that's for you, AY there. Conclusively, call me after this particular chat. Then I can tell you how you can go ahead and top up your account to hold the trade. So it all depends on how much the lot size you are using. You need to top up your account to hold that trade. Otherwise, because you have to close it. But I will not advise that. Top up your account. What is the money doing in the bank? I'll drop my number after this particular at the end of this call so that you can call me, get more advice, top up your account, hold your trades. Then the next question is say we should analyze Euro GBP. Okay, you have given me the price and entered. Okay, that's fine. So let me look at the price entered there. And boy, I hope it doesn't take much of our time. Wow. So that means you entered this gold immediately. Maybe say, let's say yesterday you entered. Now, before you entered this gold to buy, it was already on a downward trend. So that means you don't trade with your trend, right? Or you're trying to catch early reversal. No, you don't do that. The market was already trending at this 2645. At this 2645, market was already trending, right? It was already trending downward. So just do exactly what I say, okay? You can call me AY there, but the same advice I'll give you, okay? Put more money to your account, then you can see how you can hold it. Okay. So someone is asking us to analyze Euro GBP. So we have done you. Okay, let's just honor that request there. Euro GBP, right? Just a minute. Let's honor that request. That request Euro GBP. So guys, this is Euro GBP. So let me do quick analysis here on the H4 time frame. This one is a kind of confusing, right? But then you just start drawing those lines to make it easier for you. So this is a downward trend, right? It broke the structure to the downside, broke the structure to the downside, but it did what we call a change of character there. Then afterwards, it started trading downward again. So let's check. Let's check. By trading above this high, it has shifted to the upside, but immediately it started looking for liquidity downstairs. I mean down. So this is the low it gave us, right? So the market hasn't taken at this low. So therefore, it hasn't taken at this low, right? The market has not taken at this low. All right, guys, we are back again. So we are not the market is here to tap this liquidity, right? The market is here to tap this liquidity. So once the market take out this liquidity, that means that simply means the market has shifted to the downside. Okay. So once the market trades below this low, but do you know the market can come this low and of course pump this high again, right? The market can come this low and pump this high again. So automatically it makes this place an order block, right? So that means this place is a delicate area that you want to be careful of. Mm. Now, but until it takes out this low, so it simply means, and this place is a good area that can give a good risk to return, right? So it can give a very good risk to return. Right? So that means, remember it has shifted to the upside, right? It has shifted to the upside. So until this market take out this low, because this low is a strong low because it's responsible for breaking this structure, this structural high, right? So therefore, we have shifted to the upside. But if the market trade below this low, we have shifted again to the downside. That's what it means. So what do we do? One of two things. So this low still remains our strong low because once the strong low is taken out, then of course we are shifted to the downside. That area can serve as a support, sorry, as your stop loss. Then of course a bias can come in here, right? If you see bullish bullish structures, right? And is there a bullish structure already there? Yes, there is one here. There is one here. This is the bullish engulfing, right? Then, of course, take profit at this high. Now, this particular analysis is for swing traders. Why? This is on H4 time frame. H4 time frame, right? Most traders cannot even wait until the market move this much. So the analysis is not for you. If you cannot wait until the market move this much, this is a very big movement on the H4 time frame. This would take up to 6 of the 4 hours candle is 1 day. So from here to here, how many candles we have from here to here? This is about 2 to 3 days. So let me drop to a much lower time frame so that you can see what is happening there. On the much lower time frame, 30 minutes time frame, this is a pure downward trend, right? But then it is downward trend. Now it is entering a very strong support area. So this is very strong support area, right? So if I were you, I would not continue to sell, right? I'll be looking out for the market to turn a change direction to the upside. You only continue to sell if the market has broken, this particular low. Okay, so this is a downward trend. Those using 4, they'll be seeing a downward trend. Those that like smaller time frame, they'll be seeing a downward trend, so they'll be selling. But then this is a trap. This is where the market has potential of turning, right? So you don't sell. You wait for the market to break this level before you sell, right? You don't sell. You wait. Otherwise, this area is a good area that the market can turn and start going up. So let me do US 100 precious instrument there, US 100 real quick. So we saw a very good retrace movement downward on US 100. And so guys, this is US 100 here. We saw a very good movement on US 100 downward, right? And that particular movement was able to clear. Now today is Thursday, this is Monday. Today is Thursday, this is Wednesday, Tuesday, Monday. Okay, so that particular move was able to clear Tuesday low and Wednesday low, right? That particular move was able to clear 1, 2, 3, 4, 5 last week low, right? So that move was not a choice move. That move was able to clear. So I know this instrument moves up more than it moves down, as you can see, right? So anytime it moves down, it's an opportunity to enter a buy. It's an opportunity. It's an opportunity. But you don't trade there with small money. Oh. So call me after this call, top up your account, then we can do this. So you notice the market gap up heavily, right? So that means it was trying to recover. Why did it gap up? It gap up because um, investors all over the world, they bought massively, right? They were just buying shares massively. Why? Because they have seen a low price. So that's why it gap up, right? And very soon it will come out. So it's a very good time to enter buy, right? So or it's a very good area for your buys. Why? Because the next target will be to crush all of these highs. So it gap up, gap wide. Whenever the market offers low prices like this, investors all over the world sees that as an opportunity, That movement is very low. It's very low because it crushed last week low, right? Crushed last week low, crushed the low for this week, but it not crushed 3 weeks ago low, right? This is 1, 2, 3, 4, 5, right? So it's just last week low. It took out last week low, right? And there's a lot of liquidity that will be resting below the last week low. It's part of the reason why it had to move up like that, right? So there is a lot of liquidity below this low. So it took out that low, right? Took out that low. So one of the ways you can trade lows and highs, which you call market structure, is whenever the market trades above or below last week low, last week high, last month low, last month high, those areas are areas where the market normally experiences a lot of retracement. So you can see after crushing this last week low, it started retracing, right? Upward, started retracing upward, started retracing upward. So once you see the market crush a low and a high like that, let's say last month high, last month low, you will normally expect the market to retrace. Why? It has achieved something big. And whenever you achieve something big, you want to take a breather, you want to pause, and of course, celebrate your win. Okay, something like that. So long story short, right? This instrument is actually trending upward, as you can see, right? But this movement downward have shifted the OT to the downside. But this is stocks. This is indices, right? This is indices. So you do the analysis, you do market structure analysis, but there is something that is driving the market structure, right? It is called macroeconomic data of these companies, right? So and it's stronger than the market structure. In fact, that is what gives birth to the market structure. So whenever you see low prices like this, you want to take advantage of it, right? So one may want to use this low as a stop loss. Then of course, target this high. That would be a good arrow to arrow. Right? I don't mean Rolls Royce. I mean risk to return ratio, right? So this is like you can see a whole lot of pips, right? So we have done US. Okay, fine question there. Okay, this instrument is US 100. Yes, Moji, I can see there is risk to return, eh? Risk to reward or risk to return, anyone, arrow to arrow. Then is there any tendency that it may want to fill up the gap before going? Of course, it has tendencies like that, right? It has tendencies like that. If you watch it, it's most times it doesn't fill up the gap completely, right? So the gap is actually the gap is actually from here, right? To here. That's the gap. So if you watch, it has taken out some time to fill out the gap a little, but not up to 50%, right? So all of this movement downward created inside the gap, right? And so it may fill up the gap 50%, that's 50% encroachment before going up. But what I'm trying to say, it will go up, right? It will go up. So what you want to do, you want to do a swing trading here because you don't come here with small money. You don't trade US 100 with 100,000 there. I mean, you don't trade US 100 with 100,000 naira. No, you'll be trading here with good funds, right? Minimum 200, 300, 500, even 1 million naira so that you enjoy it very well. So it means you may want to stay longer, right? Any small movement, any small candle against your direction should not scare you out of the trade, okay? So what I'm trying to say is that the market is going to crush this high, right? So that may happen in days time or even, but it may also want to do some retracement into this gap, okay? Because it has already done that, but it may want to do more. But long story cut short, if you drive down to 15 minutes time frame, 5 minutes time frame, you can see that the instrument have given us a new high, higher than the previous high, right? So on this slow, much lower time frame, you may want to be more precise with your entry, right? More precise with your entry. That's if you have small capital, very small, small as 200K. You want to look out for this fair value gap area. Market has done that already, but this area will be a good area for a buy. This area will be a good area for a buy. This area, this shaded portion will be a good area for a buy. Then you may want to use this area as a stop loss, yeah, because you have small money. But if you have big money, this last low here should be your stop loss because the market is pushing upward. So guys, we have done Euro, USD, GBP, USD, a lot of instrument, guys. So if you have any requests again, it's already 9, but we will just want to honor one last request. Otherwise, we'll just wrap it up. But before that request, my name is Emmanuel Odogu. Guys, I'll drop my number 0902626. Those that want to fund their account, top up their account, you may as well reach me 090. So I'm sending this now to everyone. 09026264507. Emmanuel. May the market be with you guys. May the market be with you guys. Pekula, you're just coming. We have already analyzed gold. You're just coming. We have already analyzed gold. So you can check out the analysis on our YouTube channel. We're also recording this live, streaming live on YouTube. Get straight to YouTube right now. Rally Trade on YouTube. Check out their analysis. Watch it over and over again. Education is powered by repetition. Bye for now.